The third quarter has now begun, but let's take a few minutes to look back and do a second quarter state of the market update on this week's video market update. Quick compliance, this is not specific advice on any portfolio, just an update on the market and the economy. So turbulence from the first quarter continued into the second quarter, leading markets to drop into bear territory. The S&P 500 actually had its worst first half of the year since 1970. The second quarter started with a dismal reading of the gross domestic product, or the GDP. Many people had expected a slowdown, but it was still surprising after a 6.9% fourth quarter GDP growth to then have a negative 1.5% GDP growth in the first quarter of 2022. We will find out second quarter numbers in August, with many expecting it to be negative, which would then be the quote-unquote technical description of a recession. So some of the challenges we saw in Q2, inflation. It's been the story that's been here all year. We had a 40-year high of 8.6 in May. Oil and gas. Right, gas went over $5 a gallon nationwide. In some places it was $6, in some places it was approaching $7, and a barrel of oil got up to $120 per barrel. And rising interest rates. The Federal Reserve raised the federal funds rate. We saw a 75 basis point or 0.75% increase, and it's really had an effect on the market. It's had not a direct impact, but kind of a direct impact on mortgage rates. So the second quarter challenges were no different than the first quarter challenges. So we know more interest rates are coming. The Fed has already said it intends to raise interest rates in the July meeting, which is coming at the end of July, and many believe that 75 basis point increase will happen again, with many expecting the federal funds rate to sit at 3.25% by the end of the year. So there is some good news. Unemployment dropped in the second quarter to 3.6%, which is the lowest number since the pandemic began, which is great news. So now we know where we are at second quarter. A lot of the challenges we had in the first quarter. So what's the third quarter expectation? So although the Fed has bumped its interest rates, it could be a while until we start to see inflation come down. Many people, a lot of people in the financial media and academics said, oh, I think we've hit peak inflation. Well, we know that not to be true, because this morning the inflation number came out at 9.1%. Most economists thought it would be at 8.8. So we had 8.6 in May, and that was the highest we've had in 40 years. Just this morning, the number that came in for June was 9.1, the highest since 1981. So inflation, even if it peaks, what we need to see is it not peaking. We need to see it peaking and then going down. So that's the third quarter outlook, is inflation will still remain high. Spending is likely to slow. Now, consumer sentiment has gone down, but Prime Day and all of these sales, as the supply chain slowly open, more goods are coming to the shelves. Retailers don't have space, so they've got drastic discounts on clothing and consumer electronics. So yes, spending may slow, but it may not slow as fast, which would be fantastic for the economy. And volatility will continue. There's a lot of unknowns. How long does the war in Ukraine last? When does inflation start to come down? As we head into the midterm elections, there's always volatility towards elections. And if the Republicans take back control of the Congress, which many believe, there's a little certainty there. If something changes, that could add to some volatility there. So it all comes back to staying and sticking to the basics. So every situation is different. This isn't a recommendation, but generally for most investors, it's to just focus on the controllables, focus on what you can focus on, and we'll continue to do that. We've made adjustments to portfolios that have been needed. We've allocated some to some principal protection pieces. We've talked about I bonds. We've even moved some to cash. So I think that changes that have been needing to have been made have been made. Now we've got to wait to see what are the rate. Gas prices are coming down. Well, call me when they get back to $3.50. I'm not excited when it's $4.99. Let me know when inflation has not only peaked, but has started to drop. So yes, there are challenges in the third quarter. They'll be the same challenges we experienced in the second quarter. We're still in a very challenging time in the economy. There are still bright spots. There are still some places where some good things are happening. We just need more of those. So that's just a quick update on the second quarter with a slight view of the third quarter expectations. If you have any questions on this, let me know. If not, as always, I hope you make it a great week.